Good morning. This is Howie, and I'm here to help you win with money. Today is Thursday, October 22nd. The market looks like it's gonna open flat. It's turning directions now. You see that? Today's video will not be about my morning trades. I'm gonna talk about my overall strategy. And at the end, I will copy all my transaction history log from my ETrade account into my spreadsheet so you can see how much money I made up to this point for this week. So let's start off with what strategy am I using? If you watch a few of my videos, you would think, holy cow, this guy's just a day trader. Or this guy, all he does is trade and there's no way he's making money and he's only showing us his winning trades and all his losers he's hiding. So let me try to explain this. What I believe in indexing. What you don't see is all the boring stuff behind the covers. And what I mean by that is, I believe in indexing S&P 500, right? Mid caps, small caps. Those you do through your 401k plan or your retirement plan at work, if you have. But even if you don't have, it's been proven that that strategy is just so hard to beat. And here you go. You can see that actively manage. Again, I don't know how accurate these are, but they're saying very few people beat actively, right? Active managers do not beat the benchmarks. And you see that. Passive management marks a decade of beating active US, right? Managers. So you can see that indexing, it's still one of the best strategies. And over time, we're going to see that. And so, why do people stock pick? Why do people do other stuff? Obviously, people are tempted by the 100% gains. Everybody thinks they can make 40, 50% a year for the rest of their life. And that's really not true. And I'll cover that as we go on. So the next thing I talk about is once you got your indexing covered, your core, right, your base, you build a portfolio of safe, boring indexes. So you're being average, but being average in the stock market is okay. Because if you can beat 70 or 80% of professional money managers, in my book, I think that means you're smarter than they are. So where does stock picking come in? So stock picking comes in once you have a good core. And most of us, we use indexing in your 401k plan. So that means you can stock pick in other accounts. For many of us, right, we open an IRA or a Roth IRA through our brokerage account. Or if you have a rollover from a previous employer, you may have moved it into a brokerage account. Those are great opportunities for you to then to decide how to stock pick. The reason why people stock pick is if you think you can beat the market. Now, if you can't, just stick with indexing. You don't need to stock pick. But there's many methods. Some people use high growth, right? You're buying these companies with no earnings. Sounds like Tesla. Well, Tesla has earnings now, but it sounds like an Amazon, right, 20 years ago. There's a lot of these companies that you're buying today that have no earnings, but you want to invest in them, right? Like things like a Teladocs. Do they have earnings? And you can see there is no PE ratio because they lose money, right? Let's take a look at DocuSign. No earnings. Look at this, losing money. But yet, if you look at the chart, you can make money. High growth. Value are the people who think, hey, let's buy a boring company like Coca-Cola or Pepsi. Now, I'm not against value, but value appears to have underperformed the stock market in a long time. And I think it's well over 10 years they underperform. Some people love small caps, right? They believe that if you buy small caps, you're going to get the Amazons before they become the Amazons. And I personally like the DGI, dividend growth investing, or a drip method. Those are people who want to buy a company that pays a dividend, but they're still growing. And one of my favorites, one of my favorites is Visa. right? It's a growing company. It pays a dividend. Now, this dividend is not for income. It's not for retirees. You're not going to live off 0.6% yield. You're buying this company because it has a combination of growth and dividends. And if you look at this chart, in the last 5 years, your money is growing, right? It's more than double, nearly. Look at that. And it's nearly tripled. And so you make money not on the 0.6. The 0.6 helps. You get a few, you may earn a few shares over a couple years. Then the last thing you want to do is, what do you do when you have a larger portfolio? And so this is where options come in. Options can be used for many ways. We see today everybody's on Robinhood and they're all speculating. Options are good or bad, right? Depending on how you use it. You can use it to hedge, protecting your gains from your portfolio, right? If you bought Amazon at $10,000 and it runs up to a $250,000 or $500,000, you can either sell your shares, or some people just like to hedge against it, right? You can just use an option to say, hey, in case the shares drop 10 or 20%, I'm going to use an option to hedge. So there's a cost to the insurance. But if you're wrong, you're okay. If Amazon shares keep on going up, you're okay if your insurance goes to zero, right? The value of your option goes to zero because you made money on the underlying. So that's another way to play it. Other people use it for other things. But what I want to talk about is look at the math. If indexes beat active managers, and if day traders, right, 90% of traders fail to make money. 80% lose money over time, 10% break even, and 10% make money consistently. Why is day trading so hard? And you see that. There's other videos out there. You can read this. You have to be convinced. Can you make money trading? Are you the outlier? To be honest, I don't want to find out. I just rather index. You can watch all these videos out there, a lot of good videos out there explaining the math. There's a lot of good surveys. I do believe that stock picking is very hard to consistently beat the market. It's easy to pick Tesla right now and win. Can you do it over a lifetime, right? Can you pick winners and consistently make money over time? And that's the hardest part about trading. It's anybody can pick a winner today, right? A broken clock is right twice a day. And picking stocks are that way. In an up market, you can pick anything. The dot-com boom was the same thing. Taxi drivers look like the smartest guy in the world. They buy pets.com. They buy these internet businesses that have no way to make money. And everybody was making money in the stock market. But what happened when it crashes? Well, it crashes fast. Stocks go to zero pretty quick and everybody lost money. The last thing I want to look at is options traders. What are their success rate? According to the CBOT, right, Chicago Board of Trade, 90% of option traders will lose. Now that's crazy. In fact, some people think, how can that be mathematically possible? How can 90% of people lose and only 10% win? Let me try to explain this in a different way. Options trading is a zero-sum game. What that means is, for every person who sells a contract, you need someone on the opposite side to take the bet. And so think of it as all the chips on a poker table. You don't generate new chips or magically add more chips or reduce the amount of chips on the table. All you do is you shuffle it around between the players. And an options contract is a verbal agreement, or right, if you look at a poker table, it's you do a bet with a friend on the poker table. Hey, I can do X, Y, Z. You say no, I say yes. Let's wager whatever the amount is. You agree to it. And when that event happens, someone will move chips from one person to another person. There's no creation of chips. And so how can you then get 90% of people losing. And so this is the part that's really interesting. What that normally means is the person who's winning is winning against a lot of other people, right? So in poker, it's the same concept. If you have a table of 10 people, 1 or 2 people on the table is collecting more chips from the other 8 players. And so it is possible for 2 players on the table to take bets against all the other players. And that's the way you got to think of it. Yes, even though it's a zero-sum game and it's a, right? Most people understand zero-sum game means, it's supposed to mean 50-50. And that is a true concept. But what if the person who's winning is the guy who's winning against all the other players? And this is how you can get to this 90%. It's this one person or one large business who's winning against all the other traders. Hopefully you understand that. Wealth creation, stock market is not a zero-sum game. A lot of people still don't understand that. Let me try to explain this quickly. Let's take a look at Apple. Apple is currently worth roughly $2 trillion at this price, which means it definitely peaked right here about a month ago. So at $116, Apple is still worth $2 trillion. What people don't realize is between this point here, right, if you go down here, Apple was a $1 trillion company. So now if you had $1 trillion in poker chips on the table, how did we magically get $2 trillion of poker chips on the table? And this is where wealth creation comes in. You see, it's not about, well, each stock trade requires a buyer and a seller, and so stock market is a zero-sum game. And that is not a true statement. And a lot of people misunderstand that. They think options and stock market are really the same, and they're really not. Stock market can create wealth or it can destroy wealth, right? If you got a company like WorldCom or Enron that goes to zero, every shareholder loses. And in the case of Enron, they all lose. Not just there's a few winners and who took all the money, they all lose, right? Whereas a company like Apple, you can all win. And this is where wealth creation comes in. Options are a little bit different. Again, I can do another video on that in the future. But I just wanted to address this concept of, well, then how do we use options if the odds are really stacked against us? And the key is to learn how to make trades where you can win more often. And winning 1 time or 2 times doesn't mean anything. Can you do it over a year and make money? Can you make money doing this over a long period of time? And that's what I'm here for. I claim, and I believe, and I have done it, that option trading, when you play it in a very safe and conservative way, the answer is yes, you can make money consistently. And the last piece is, as in always, right, your portfolio will get out of whack sometimes, and sometimes you do have to reevaluate and rebalance your portfolio. The way you were trading at 20, 30, 40 years old is definitely different when you're 60 or 70 years old. So that's just a little bit of common sense of what you need to do. All right, let's go and add the data to my spreadsheet. All right, I went to the right tab here. I have data for, so let me copy my data from my brokerage account. Here you go, 21st. Let's grab all that out. And then I always paste. Did I do it in the right place? Yes, that looked like it aligned up. Okay. Switching accounts. I gotta grab this data here. Oops, did I do something wrong? I must have sorted this by accident. There you go. Okay, let me copy that out. Let me paste. And I think I missed a dividend payment where I did not add it into my spreadsheet. So I'm going to do that right now. Okay, this part is really simple. You guys have seen me do this before. I may just do some editing here so you guys don't have to get bored of how I do this. The hardest part is I got to manually go through my option method and make sure I set it right. Oh, this one's not a formula, so let's grab the one with the formula in there. So hang on a sec. Okay, so let me finish editing these things and then I'll show you what it looks like afterwards. But again, this is my trade data. You see the row numbers. I'm not going to remove losing trades out of this. You can see what I'm doing. So, okay, I think almost everything is tidied up. I like to realign everything. I think everything is correct. These are some of the trades I did yesterday. I did some cover calls. I rolled some stuff over. And then I make sure I had to select these right. And then I added the dividend. I don't care about the dates. Everything looks good. Hit the save button. Okay, so here's what you've been waiting for. Here's my pivot table. Hit the refresh. And there you go. That's what I made. So this month looks pretty good. And I refreshed that one. And here's the next tab. Hit the refresh. And there you go. So anyway, this again is all options trading. Oh, there's still something wrong. Look, my dividend didn't show up. Let me go fix that. Hang on a second. Let's try it out again. Let me see if I fix the raw data. There you go. I can tell something was wrong because my pivots did not work. There you go. I expected that dividend to show up because remember I said I was missing it. So I can tell what I'm missing. So dividends are coming in. I have a lot more dividends coming in. So anyway, that's what you guys been waiting for. Again, just to summarize, I know it's boring for you guys just only see my trading, but you don't see what's going on with the other boring strategy. Again, hopefully you enjoy something in this video explaining why indexing works and how I use indexing. Right, I buy S&P 500s, then I buy stocks that I want to own for 20, 30, 40 years. I collect dividends, and then I write options on those shares. And I have done videos like on Bank of America where I showed that a purchase I did about 7 years ago using 720 bucks is generated a lot more money than the 700 bucks that I invested. And my dividends now make me, my options trading on that 100 shares of Bank of America is making me anywhere from $5 to $8 a week just writing options, which is more than the actual dividend I get from Bank of America itself. So anyway, hopefully you enjoyed this message. Like you to subscribe, right? Hit the bell, get notifications, and really what I want you guys to do is share this with your friends. Right, I'm going to teach you guys how to make money, how to win with money. You don't need to make $150,000 or $200,000 a year. You don't need to be a doctor or a lawyer. I did this making $25,000 a year or $30,000, living in Boston and New York, making very little money. And I lived like I had way more money because I invested it, and I was able to start working on my passive income even when my portfolio was small, when it was $20,000, $30,000, $40,000. So enjoy, and let's do this together. Let's do this $1 at a time and have a good and profitable trading day.